equity investors. Private equity has been increasingly active and successful in the space. So I'm going to welcome them up on the stage here. I'll do a quick introduction, and we'll make sure we hear from them. So immediately to my left, Yicong Liu is director at this TMT group with CVC Capital, recently made meaningful investment in Mediaocean, so foray into our space. Stephen Master, coming on to a 12-year plus career at GTCR, is a principal in their group, very active in a number of their investments, including Simplify, where he's currently a board member. Of course, Davis Noell, Senior Managing Director at Providence Equity, actually now co-heading the entire North American private equity effort here, as well as a lot of the efforts in digital, Double Verify, and Smartly, and other investments that are relevant. So thank you so much for taking the time and joining us. Please have a seat.
Thanks for having us.
So just to kick things off, I thought I'd ask each one of our panelists, maybe just give us a few words, walk us through a little bit like what you're seeing opportunities-wise, your thesis, and maybe recent learnings from current investments. Yicong, if you want to start us off.
Sure. For us, we've been looking at this space for some time and always found it very dynamic, but at the same time, very hard to keep up with the most recent trends because it is always reinventing itself. And so for us, what has been, I think, very helpful is spending some time in the space, finding a platform that we know is stable, that we have seen make real money, make real profit, and that business go on to expand and add through acquisitions or through building out internal talent, growthier, more true, quote, ad tech capability, and that we've seen has been very successful. Way to invest in the space.
Do you think we're at the state of maturity here? I know you're stepping into a role that Vista had with Mediaocean, where you're seeing like private equity to private equity trades still leaving some value for you to kind of, what you're seeing that maybe they didn't, go to the next step?
Yeah. I mean, for us, it was important to make sure that there was enough growth remaining for us in the next 5 to 10 years as we think about investing in the platform. For us, a big push is investing in customer support, investing in the R&D talent, and doing more strategic acquisitions to expand the platform. So that was key for us, and without that, I don't think we would have been as interested.
Gotcha. Okay, Steve, what do you want to share with us?
Yeah, well, I guess I would share, I think 2022 is a great year to be a private equity investor in ad tech. If you rewind back a year, we had a very formidable competitor for liquidity events in the public markets in pre-IPO investors. I think that is a more challenging path to an exit right now, as I'm sure a lot of folks would agree. And then with the kind of industry fundamentals, I feel like a lot of the buzzwords that get thrown around regulatory risk, privacy risk, IDFA, a lot of those are, maybe they're much better understood in 2022 than they were last year. So I would argue that the risk environment in some ways from an operations perspective is lower, but then also the valuations are, perhaps not necessarily lower, but you're not competing against the higher kind of valuation alternatives. So we're pretty excited about the environment this year, and actually just closed an acquisition in the space last week.
That's right. Congratulations.
Thank you.
Yeah, congrats on that, Stephen. Should I go?
Go ahead.
A little loud there. I think it's interesting to look at the cycles of ad tech over the last 10 years or so, and not necessarily the cycles of the performance of the individual companies, but the way they move in and out of favor with the investor community. And I think back to 6 or 7 years ago when we first started looking at ad tech and we're trying to identify interesting businesses, and I can see Dave Simpson, who was working with us at Providence at the time, thinking about that, and it sort of felt like it was just Providence and GTCR. I kind of liked it better back then. But we were trying to figure out what was going on. Terry was definitely very helpful in that, and I think what we liked about the space was you could see all these dollars moving from the analog forms of media to the digital forms of media, and you could see a lot of them going to Google and Facebook, but there were also a number of different ways that those dollars were being targeted and tracked and bought and sold, and that there was going to be real investable opportunity there. And so we sort of stuck with it, dug in, and were able to make some early investments in Double Verify and in Smartly that have turned out to be very successful. And last year was a great year for us with Double Verify going public, and I think for the ad tech industry in general, with a number of IPOs that look great on paper, and some people were able to monetize that. Now we seem to be at the other end of that cycle again from an investor perspective. I do think it'll create some good private equity opportunity, as Stephen was saying. It's hard not to be a little frustrated with where the stock price is of Double Verify. But look, I think the important thing is from my perspective, it's still a great industry to be in. We still see a lot of growth across ad tech, across digital advertising, and all across the board in different pockets. It's not just the DSPs or the SSPs or the measurement guys. You know, you're seeing it with a lot of the performance agencies right now, the digital first agencies, and so there's a number of interesting areas and trends that we're following, and we still really like the space.
Yeah, makes sense. And it's certainly discouraging to see where stock prices have come from where they were, but still phenomenal return on DoubleVerify. So, I've heard, one of the top IRRs, venture type returns, right, for private equity investments. So certainly congratulations on that. But what do you think about, the current public market environment? We talked about that a little bit this morning. It seems that, the market pullback is a little out of sync with the business performance. We're seeing a lot of it driven by, macro, other forces. Do you think that things are starting to become fundamentally different industry-wise, or is this kind of the mother of all buying opportunities?
I think it's an interesting buying opportunity. I mean, I think what you're seeing from the market is telling you a couple things. One, they don't like unprofitable companies, right? And if you look at the bifurcation between unprofitable technology businesses and profitable technology businesses in the public markets right now, I think year to date, the profitable ones are down 25%. It hadn't been a good year, but the unprofitable ones are down 70%, right? So the market is saying, we want profitability. And I think the market is telling you that there's a really high probability of a recession, and that's why the stocks across the board are kind of coming down. I do think that creates, again, a good opportunity for us. And what Mark Zagorski at DoubleVerify and I talk a lot about is just got to continue to execute and not get caught up in the stock price day to day. It can be frustrating to see it and where it is. But if we continue to execute, we'll do well, and eventually the stock will come back up. And the company had a great first quarter, and a lot of ad tech companies had a great first quarter. Yeah. Facebook was sort of the big outlier on that front. They're still struggling with some of the IDFA changes. But I think it'll be a good year performance-wise for ad tech, and hopefully that will reflect again in the stock market. And it seems like we found a bottom in terms of multiples, maybe. Yeah. We'll see.
Yeah, we'll see. Stephen, you'd agree, disagree?
I would. I think the public markets have overcorrected this year. So I don't think we're at the point yet where a board might, capitulate and engage with a private equity firm on, take private conversations. But if valuations were to stay at this level, I think across the board, especially for these companies like Davis mentioned that are growing and profitable, can support leverage. The math for an LBO works for many of these companies in our space at upwards of, for some of them, even like 80% premiums to their current stock prices.
Wow.
That doesn't mean but that's also like a 20% discount to where they were trading 3 months ago.
Right.
So, don't go kind of
rush.
rush.
For that to see
so if I'm a board, I'm probably not just hitting the sell button.
Right.
But I think the markets have overcorrected. They should probably come up.
Gotcha. Yicong, what are you kind of telling across your portfolio companies right now? Is it time to step on the gas and take advantage of this dislocation, or is it, RIP good times, conserve cash, and pull back?
Yeah, it's a tale of two stories. So for the businesses that are running, and we want to make sure they stay profitable and continue executing on what they're doing, that's very much double down on that. For the businesses that are acquisitive or we see a lot of opportunity for add-on, actually I think now is a good opportunity, as good as any, to make sure that we're exploring all the potential businesses we could be talking to. Because I do think public markets, I agree, probably have overreacted a little bit. There will be a lag between the private and public markets, right. But at some point, one or the other will get a little bit closer to where the difference is today. I think there will be a little bit of pressure, at least in the back half of this year.
Yeah.
But I think the business fundamentals are strong. So assuming you can, keep execution through this period, we're very fortunate to have many avenues of capital as well as being able to run our company.
Yeah, totally makes sense. So kind of curious, especially, David, Stephen, you've kind of been in the industry, or at least focused on the area longer than most, have seen the markets kind of go up and down a little bit. I'm kind of curious how you think about competing with strategics. That was more challenging maybe the last handful of years, maybe less so as we're going forward. But how much, obviously for the last couple of years, maybe just pay more was part of the answer. But How much of your approach to value creation and potential structure or rollover opportunity for investors and management, how much of that is kind of part of the pitch of partnering for a transaction with you versus maybe just selling to a strategic, so to speak?
Yeah, I'm happy
go
to
ahead.
start. I mean, when we acquired Simplify in 2017,
Yeah,
we
great
were
case
competing
study,
against a
sure.
strategic, and we bid the same price as that strategic buyer, and
Right.
we were able to, to convince the management team they'd have an opportunity for further wealth creation with us. They could get partial liquidity, roll, get a new incentive equity package, and provide an environment for growth that was de-risked for the management team relative to joining a larger business. At the same time, I think that's almost the exception rather than the norm. I don't think the businesses that we go after day to day, we like to find niche-y, category-leading businesses that almost by definition are not going to add a whole lot to a big, well-capitalized strategic buyer in this space. And so a lot of the acquisitions that we see, I don't know, the Googles or maybe even the trade desks of the world looking at would just not be. They'd be more tech, team product oriented, where we're trying to buy, to kind of steer clear of the big guys and look at spaces that they just don't even really care about.
Right.
Yeah, I think it'll be interesting to see over the next 12 to 24 months, but I would expect more consolidation in the space, and we'll try and play it from both angles. Certainly we like being a strategic buyer with Double Verify or with Smartly, and we're looking in for acquisitions. We've announced a couple acquisitions at both companies over the course of the past 12 months, and we're seeing some good opportunities looking forward prospectively. So we'll definitely be out there aggressively trying to make acquisitions. I think you could see the return of the agency holding companies to being aggressive around acquisitions. They haven't been as much recently, but those businesses are generally performing better, I think, than most people expected. They have cash. They need to find new ways to grow. So I think you'll see some of that coming back. And we as a private equity firm will continue to look for our pockets, as Stephen said. I mean, we prefer not to go compete with a bunch of strategics if we can avoid it. And I do think the pitch of the private equity firm coming in and backing the entrepreneur or the founder or the CEO and working with them to continue to grow the business and make acquisitions does resonate with a lot of CEOs. And so we try to find those types of situations. But I would expect more consolidation for sure.
Yeah, I think that'll definitely be the trend. And as you kind of mentioned, with more and more companies fitting the screen where LBOs work and all that, and maybe it's the curse of success when you have the returns you've had, being somewhat early and not quite alone, but maybe competing more with strategic. How do you think about differentiating against other private equity investors that are likely to become flooding in, looking at kind of these opportunities?
Some of the private equity investors are like lemmings. They just follow me and Stephen. And
That's right. That's right.
Like Blackstone, Sachin's not here. So
I know we make fun of him. He didn't make it. Right.
He
Didn't make it
just
to our
followed us into the space. And I guess he'll continue to
with
do
some
that. But
success on his own.
we've got, it's helpful that we do have a bit of a track record now in the space, and people know that, and that resonates. And a history of being good partners to management teams and align with them, and that's a big part of our pitch. But there's certainly more competition, and Stephen, I think, touched on it. The combination of growth and profitability that you have across digital advertising, ad tech, is pretty unique. You see that in some other categories of software, but not the same growth that you've seen here. And so that's what attracted us to it initially. That combination, I think others are seeing it and realizing it and coming to the space.
Yeah, I mean, I think as Yicong mentioned earlier, it's a very dynamic space, and I think more than most verticals that we would look at, the teams that we meet with in the sector, they want to talk to a private equity firm that understands what they do and the challenges they face. But also, we can differentiate by bringing like a unique kind of executive angle to a situation, whether that's a chairperson, or in the case of our Squad acquisition, we literally brought in a management team. We brought the team that sold Integral Ad Science to Vista in to actually take over and join the existing team of Squad and help bring that business more into some digital applications. But that's another way that, again, if you've been in the space long enough and you have a broad enough network, you can add those angles to kind of help differentiate your proposal.
All right. Yicong, anything you'd add?
I mean, as the relative newcomer here, for sure I would echo all those things. You kind of just have to do your homework. You have to build relationships. You have to find a way to back great management teams, and that's how you get your in, and from there hopefully expand to build out the platform.
Yeah, you mentioned doing the homework. Kind of curious because this sector has been somewhat notorious for being complex, being fragmented, being dynamic. One that is scared away a lot of investors are in the space. Curious, how do you kind of do that homework? What does that look like in terms of getting up to speed? Other reading the Lumascapes and talking to Terry, I get it. But beyond that, talk to me a little bit about what that effort looks like.
It's everything you said. It's meeting management teams. It's doing the primary research. It's leveraging your network. For us, we have the benefit of, we have a large global platform. So in addition to our US team, we have a ton of partners in Europe and Asia, and everyone has different relative experiences in investing in advertising type models. And for example, we have actually large, significant consumer and retail portfolio companies who then can refer us to, oh, these businesses are doing really well for helping our marketing or advertising campaigns. You have to get creative, but if you leverage your network, if you do the homework, it is.
Do the work.
Yeah, there's a lot of opportunities.
Right. Anything you'd add to that?
Yeah, I mean, I think my job is to find managers, CEOs in particular, that really share our philosophy on profitable growth, on strategic acquisitions. I don't as much try to do the work on the sector and figure out what businesses or what little niches are going to be the best ones. I mean, frankly, there's 10 people in the audience here that I've talked to in the last 3 months to say, hey, what do you think about this one? So you guys know way more about that than we do, and we can always call in a favor. So it's that combination of, does the CEO share kind of GTCR's philosophies on how to run a business, and do the people in the audience think this is kind of on the right side of the industry trends?
It's an interesting space because advertisers love to test out different technologies or agencies or ideas, and so they're always sort of splitting dollars, and there's so much money in the overall advertising ecosystem that you see these companies kind of crop up. And I remember when I first started looking at the space, we had looked at a number of DSPs, and I was like, I can't figure out which one is which, and somebody called and they're like, oh, there's this one Trade Desk, I think it's got like 50 million in revenue, you should check it out. And I was like, I'm not looking at any more DSPs, I just don't understand it. So I guess I was wrong on that, but
It turned out all right.
that one turned out okay, actually. So we one of the reasons we picked Double Verify originally was because we felt like it had deep ties to a part of media that we had understood historically. Like we had looked at Nielsen in the past, we understood the value of measurement in TV, we had looked at Arbitron, we understood the value of measurement in radio, and we said, wait, there's not really somebody providing that verification in digital advertising, and it's a much bigger ecosystem, much faster growing, and that's kind of what attracted us to it. So you just kind of, they said it, you got to do the work, you got to figure out the various trends, and you got to talk to as many executives as possible, because the executives know way more about the space than we ever will.
All right. Well, there you have it. Appreciate it. I think we're about out of time here, but I think there's no shortcut there. Just got digging in, doing
There's
the
no
work,
shortcut,
and makes you look smart in retrospect. But congratulations on the success to date, and thanks again for spending some time with us. Appreciate it.
Thank you.
Thank you.
Thanks, Mark.